The focus is on Route Mobile. Rajdip Gupta, MD and CEO of Route Mobile, is now joining us to talk more about numbers. What we saw in your numbers, Mr. Gupta, was mild weakness this quarter. Is it a seasonal one? Is it one-off on a sequential basis? Talk to us about what exactly happened on margins front as well.
Hi, good afternoon. If you see our number overall, in spite of Q1 being the weakest quarter for our entire season, but in spite of that, we have achieved the highest revenue in terms of overall revenue. If you see, we grew by almost 14.4% year-on-year basis, sequentially at about 8.5%. Apart from that, if you see the margin gap, I think there was some one-off cost we have incurred in last quarter due to that, and plus there was additional tax impact we have seen in UAE, which has caused this little bit, I think, impact on our margin. But otherwise, we are fairly well positioned for this quarter, and we see a good traction happening. And we believe that the numbers which were little bit muted or little bit down because of that certain one-off cost, which is just now over. In this quarter, we will see the overall impact as a positive.
I think the overall gross margin to be around that 22-23% mark, and overall EBITDA margins 13 to 14 for the entire year.
Yeah, in fact, we have already given the guidance to the market that our overall growth ratio is going to be in between 18 to 22%, and EBITDA margin is approximately in the range of 13%. And we are very much intact with our guidance, and we will definitely achieve this.
22% on the top line. Is it a bit conservative because your deal wins have been quite strong, as my colleagues and analysts tell us? What then is keeping it limited to 18 to 22%?
If you see the overall CPaaS market growth globally, I think the overall global players are growing at a single-digit growth ratio. As far as Route Mobile is concerned, we being in emerging market, I think the guidance of 18 to 22% is definitely one of the best guidance in the market as of now. I know it is a little bit conservative, but we will always given a conservative guidance in past also, and we will try to overachieve our guidance. But 18 to 22%, I believe, is the best guidance, and it's an industry-leading guidance. You can take that as.
A little more on your overall strategic kind of a move. You've done, acquisitions lately, and you're taking one-off costs as well to grow business. I want to understand. Do you think it will be fair to assume in the next 3 years you could be moving towards $1 billion kind of a revenue on an annual basis?
Yes, indeed. If you see our overall pipeline, and there are certain large deals win. I think there was a deal announced between Proximus and Microsoft, which is a huge deal, and I think it's a 5-year deal which we have already signed. And we believe that these kind of deals are going to definitely lead to our vision of $1 billion revenue. And we are also working with some large OTT players as well as some large enterprises, which we will announce very soon. And these are also as big as Microsoft deal. So we believe, I think this deal and the help of Proximus and cross-sell, upsell opportunity with Telesign, we will definitely achieve our vision and the guidance of $1 billion in next 2 to 3 years down the line.
FY27 is, by end of FY27, is it fair to assume that that kind of number could be achieved with current kind of margin, 12 to 13% margin?
In fact, yes, that's a target we have taken ourselves, and between 2 to 3 years, I'd say that's a guidance we are giving. Based on the new product traction with the customer, where the margins are very high, and if you see our new product revenue, which has grown almost by 94% year-on-year basis, which is a very good sign for overall for the company's growth. And we believe the new product revenue is going to add more value to the Route Mobile portfolio, and we are working very closely to gain more customer on our new product, which is a very high margin game. So overall, the margin guidance will definitely remain, and maybe we can overachieve that guidance as well.
One quick word, if I can quickly squeeze in. When does Proximus want to bring down their shareholding to 75 to meet the norms?
So I think the work is already started. The team is working on it. Very soon you may hear some news about that. But we were very much aware that this has to be done within a 1-year timeline, and I think the team is working towards that.
IP of sorts that you will bring in, or an OFS? What's the way of doing that?
We still didn't have the entire idea, but we are still working on the mode how it's going to be done. But we will definitely share to the market once it is decided. But yeah, there are multiple options we are looking at to dilute.
Okay, Rajdip, on that note, we'll let you go. We'll speak with you when you have more clarity on that dilution as well. Thanks so much for making time.
If you like this video, then like, share and subscribe to ET Now.